Robinhood Financial fined $65 million by SEC for misleading users. Robinhood is the app that has made investing accessible for the masses, with being one of the first brokers to offer zero commission trading. And that was revolutionary. No longer would you have to pay an $8 or even 20 some dollar fee to buy a stock. Now it was $0 and people started trading a lot. Some people making even upwards of hundreds of trades a day because they're all free. But what the SEC has alleged is that from 2015 and 2018, it was not truly free because there were a lot of hidden costs that they didn't explain in their FAQ page. Now, there are a lot of issues with Robinhood. The gamification of investing lures a lot of inexperienced traders who don't know what they're doing. It has turned it into a gambling arena for a lot of people. There are outages and slowdowns at crucial times. It's just so popular and its infrastructure isn't the most stable. But today we're just going to talk about how they make their money and this specific situation with the SEC. And you would expect them to put up a fight of some kind, but no, they actually paid the fine without officially accepting wrongdoing, saying that this is no longer how they do things and they are a lot more transparent. Let's take a look into this article and I'll give you my thoughts. As always, I'm just a guy who's passionate about finding the best investment opportunities. These are just my thoughts in the moment. As I learn more information, my opinion can and will change. Robinhood Financial has been fined $65 million for misleading its stock market customers about how the company makes its revenue from their trades, the Securities and Exchange Commission said Thursday. The SEC fine comes one day after regulators in Massachusetts filed a lawsuit against Robinhood for allegedly targeting young, inexperienced investors with flashy gimmicks on its app that treat stock investing like a game. So one of the examples of that, which the article mentions later, is when you make a stock trade, it will actually pop confetti everywhere. And it's like a celebration, like, whoa, you made a stock trade. It doesn't feel like you are actually making an investment that should be taken seriously. And the whole UI, which is why I really like looking at it. Look at how clean and pleasing this UI looks versus a TD Ameritrade, not as aesthetic, especially to the younger traders. Federal officials said that between 2015 and 2018, the company only partially explained on its online FAQ page how it makes money, omitting details about its largest revenue source, trades. Robinhood takes a user's stock order and sells it to a larger trading firm that executes the trade, a process known as a payment order flow, the SEC order states. Robinhood made no mention of payment for order flow rates, federal regulators said, at a time when the company was rapidly growing. While Robinhood markets its services as commission-free, the SEC claims that customers in reality received inferior trade prices that, in aggregate, deprived customers of $34.1 million despite any savings they received from paying zero in commissions. To put it very simply, Robinhood was advertising that these trades are free, zero commission. But in reality, they were not free because the stocks you are buying, you would have to pay more on Robinhood versus another app. And even now, let's say I wanted to buy a share of Tesla. If I want to buy a share of Tesla on Robinhood, I have to pay the current market price. You can see that the current market price is fluctuating. And if I buy it, I just get the price at this second. But this is not the best possible price I could get. Now let's look at a TD Ameritrade in comparison. If I want to buy a Tesla on TD Ameritrade, you can actually see the bid-ask spread. So as opposed to buying it right now at 647.7, you can see that the bid is actually a little bit lower, and it's always fluctuating. It's hard to catch. Usually, if you want to buy stock prices, at least for more experienced traders, you would never pay the market price. You would want to pay on the lower end, which is the bid price. And due to market fluctuations, hopefully get that order filled. What Robinhood was doing at the time was not only were they taking the average of the bid-ask spread, but using their relationship with market makers, the price was actually just more. So you could not get the same price. They were charging you more to buy the stock because that's part of how they were making money. When I first signed up for Robinhood many years ago, I remember going through and being curious about how they made their money. And my impression, based on the information available at the time, was that because they were holding our money, they could collect interest on that money or use it to invest in other things. And that made sense to me. I had no idea that I was actually getting charged more for the stocks I was purchasing because they had specifically said this is no commission. So the way they were able to do this was through payment for order flow rates. And if we go to Investopedia, payment for order flow is a method of transferring some of the trading profits from market making to the brokers that route customer orders to specialists for execution. So the market makers are the people that decide on the bid-ask spread. And then through what people are buying and what they're selling for, they make the difference between the bid-ask spread. That cost that us as the retail investors are taking from buying and selling, the market makers who created that would get some of the profit and they would pass some of it to Robinhood. Robinhood provided misleading information to customers about the true costs of choosing to trade with the firm, SEC Enforcement Division Director Stephanie Avakian said in a statement. Robinhood is now fully transparent in our communications with customers about our current revenue streams, a company spokesperson said in a statement. The fine stems from historical practices that do not reflect Robinhood today, Chief Legal Officer Dan Gallagher said in a statement. The multi-million-dollar fine marks the second action Robinhood has had this week with government regulators. So if we were to go and look at Robinhood's site, they're very clear on how Robinhood makes money. They get rebates from market makers and trading venues. They say that they have relationships with a number of market makers and they send your orders to the market makers that they believe will give you the best execution based on historical performance. Rebates aren't considered when your brokerage orders are routed. So according to this, they aren't taking a cut of that profit anymore. Actually, the market makers will be the ones paying them out in the form of a rebate. It's a subtle difference, but it definitely is a difference. They also make money from Robinhood Gold, which is a subscription service that gives you more margin and some data analytics. They also loan stocks. They have income from cash, which is the cash that you just have sitting in your account. There's cash management and then a number of other smaller revenue streams, but I imagine these are still the main ones. On Wednesday, the Massachusetts Security Division said that while Robinhood markets itself as millennials' gateway to the stock market, the company uses gaming strategies to manipulate customers to trade more in order to boost its fees. Colorful confetti, and this is what I was referring to earlier. One example from the suit: to further coax customers on its platform into trading, Robinhood rewards users with colorful confetti raining down their screens after executing trades. These and other tactics are Robinhood's way of turning serious investing into a game, Massachusetts Secretary of the Commonwealth William Gavin said in a statement. The alleged tactic is not only unethical, but also falls far short of the standards we require in Massachusetts. We'll skip a little bit, but here's something I want to note. State regulators allege that Robinhood's tactics resulted in hundreds of users making thousands of trades. As one example, Robinhood allowed a customer with no investment experience to make more than 12,700 trades in just over 6 months. Now, nobody likes fees. But the thing with fees is that if you are going to pay to make a trade, you are going to do more research. Where everything is free, you don't value the cost, the true cost of a trade. You don't value doing the right research and that this is actually an investment or it's a gamble. It's investment if you've done your due diligence, if you're willing to hold, if you truly, truly believe in a company. If you are making 12,000 trades, I don't believe that you've been able to do proper due diligence to make investments. At that point, you are likely gambling, and that's totally okay. Traders should know the difference between investing and gambling. Galvin is asking a state court to levy an undisclosed amount of fines on Robinhood. Regulators also want a judge to order Robinhood to find an independent consultant to evaluate the app and company policies. This is also following a string of negative publicity. There was a major outage in March, which occurred on the same day that the Dow Jones notched a one-day historic gain of roughly 1,290 points. I would be super pissed. There's also days where there's some kind of catalyst where Robinhood is super duper slow, and I've corroborated that with a couple of my buddies. They've all experienced the same slowdowns. In Robinhood's defense, TD Ameritrade is one of the most widely used platforms, especially their Thinkorswim platform, and they have been down to on pretty crucial days. It's not unique to Robinhood, but because of the number of people on Robinhood without sufficient investing experience, when this stuff happens, there's more of a crisis. They aren't managing the trades and their risks in the best way. So when something like this happens, it could really, really hurt, especially if they're day trading. And the most tragic thing that happened was in June, a Robinhood user from Illinois died by suicide after his account erroneously showed a negative $730,000 balance. And that's just a big tragedy. This also happened to me once, and I documented it in another video. I placed a call debit spread on Amazon, And at some point it expired out of the money, but in my account balance it showed negative 600,000 some dollars. And even though in my head I was fairly confident, 99% sure I had done nothing wrong, my body went cold. Because if there's just even a 0.0001% chance that I owed $600,000, then my life felt like it was functionally over. These are things that Robinhood needs to fix, in my opinion, because they are attracting so many uneducated users. If everybody was educated, they might be able to see that and logically think it through. Luckily for me, I had another friend that was able to look at it and tell me that this is okay. But had I not had that friend, honestly, it was freaking really, really frightening. Anyways, that's all I have. I actually really like Robinhood, especially their desktop version of options. I just like how the information is presented. We have the Greeks here that are very clearly laid out. I don't like the mobile app that much. The functionalities are too limited. I prefer the desktop, but overall, I've enjoyed Robinhood. I would recommend you not just use Robinhood as your primary brokerage account. Use a TD Ameritrade or one of the larger brokerages because there's just more support there. If something really goes wrong in Robinhood, it's hard to get help. With that being said, you could help me grow my channel even more by liking and subscribing if this was helpful or useful at all. This is Green Knight Trading, where Squires become knights. Thank you all so much for watching. I appreciate you, and I'll see you soon.